Hey everyone, Kairos here with a video to address the many requests on how I use the Kairos Pause Indicator. Just a disclaimer, nothing here constitutes to financial advice, and the content here on how the indicators work is purely for educational purposes only. So first up, for those of you who are new to the indicator, let me just do a quick introduction of what this indicator does. And in a nutshell, what a Kairos Pause, or what we call a KP, does is it identifies trend exhaustion. So every time you see an extensive sell-off, it can potentially help to identify where this downtrend starts exhausting. And also on the upside, if something is running hard, you can find out where it might potentially stop. Now the whole motion of a KP actually has 3 phases to it, and you can see it here on the screen marked out in this example. There's usually the formation bars that appear first, which is telling you that a trend has been identified and is forming. Then we will get the red bars, which are your warning bars, telling us that the trend is accelerating and is starting to heat up. And once we see the indicator plateaus off, literally like the name itself, we expect to see a deceleration of the move to begin. So that's what a KP does, but really how can we use it, right? Now the easy way, like what I described earlier, is just simply look for the Kairos Pause plateau, or what I call a KP exhaustion. Because this is really where the deceleration of the move is going to start and where a potential top or bottom might begin. So looking at Luna as an example here, we can see that literally each time we get a KP plateau signal, we were able to pick out the local bottom, local top that follows after the extensive move in one direction. Now, of course, I don't just take these KP exhaustions as individual signals, and I don't just like buy and sell off them. But I'll say in all honesty, really nobody's stopping you from doing that. And in fact, some of the guys in the community, most notably the Art of Crypto, he had done some backtesting using such an approach, and it's been really good. In case you're interested in looking at that, you can find a link to some of his videos in the description box below. But what I usually do is to use it as a confluence factor with something else. And in my case, it's just some good old price action stuff. So here I'm going to show you 3 actionable strategies that I use, and I'll say these are pretty high probability setups that you can replicate yourself as well. The first one is my bread and butter setup. So you will see me, taking this all day long, and I post this really often on Twitter. And that is the fake out reclaim plus a KP exhaustion setup. So the idea is something along the lines of this, right? We mark out a few key levels. Maybe we identified that this is a demand zone and a clear level has been formed. And when price comes back to this area, takes out this low, fails to go lower and reclaims this area, that is my definition of a fake out reclaim. Now, of course, at the same time, if we see a KP exhaustion that gives further confluence that, hey, this could indeed be just a deviation of the level, that gives me further confidence of taking a trade back up. I guess the best way to look at this is a real life example, and we can look at this of Bitcoin on the daily chart. Now, if we go back to before this whole 48K dump happened, it was clear we had this key level that was capping the upside, right? And when we eventually broke it through, we saw a higher time frame Kairos Pause exhaustion that got printed. Now, it doesn't mean you just go short here, although, hey, on hindsight, if you did this, it would have gotten you a pretty good entry. But what I was waiting for was really a reclaim of that previous area to confirm that, hey, this entire price action was just a fake out. So if we fast forward to when we finally started dumping here, that was a signal that yes, hey, we might have lost the zone, and with confluence of the KP exhaustion earlier, we can now make a stand and say, hey, shorting this area is going to be a high probability trade to take. So that's the first way I use the KP, and I would say that's the most common setup that I take. But the second type of setup that I always look for also is in an asset that's range bound. Now the confluence comes from when price reaches either range high or range low. And if we see a KP exhaustion at the same time, then that to me signals a high probability chance of further range bound action within the same range. So for example, again, if you look at Rune on the H4 back in April, you can see once we saw price bounce off this low 3 times, back to the supply, we could project that, probably after such an extensive down move, maybe we're going to start ranging now. And with this assumption as the backdrop, we can look for longs when price comes back down to range low. Now over here, we also printed a KP exhaustion, And you could argue that this was also a little of a fake out reclaim, but I guess the idea is the same, right? KPI exhaustion at a key level will serve as a good confluence for a trade. Now, moving forward, the same thing here happened once again. As we approach range high, we started printing another KPI exhaustion. And after some consolidation below range high and one final push, we rejected that whole area and took it back all the way down. So this range play is the second type of setup that I always use with the KP as well. And now for the third setup, and I would say probably not really a setup, but more of a separate use case for the indicator. And that is, many times you guys ask me, oh, I have this trade, but where should I take profit? And there can be like a million answers to that, but if you're finding it tough to identify a good area to take some profits, then maybe you can use the logic of a KP exhaustion in that sense as well. So let's just walk through this example on ETH. And this was an actual recent trade I took, which I posted on Twitter. And let's go back to when price was still chopping about after this massive dump. And really what I was looking for was a reaction around this key level at the March monthly open, because you can see it's been acting as support and resistance all the way previously. Now fast forward, we finally got a push above. We also started to see the KP exhaustion forming here. And I had a pretty good feeling, we are going to get a fake out. So I actually already started scaling in here. And once again, moving forward, we finally got a confirmation. And now at this point, if you look at price, I would say the natural target for me was to perhaps, target this lows all the way back at 2,800 again. Now that was an ideal target that, I set out initially. But as price developed, we got to be flexible about it, right? So what I realized was if we drop to a lower time frame and start moving forward, we start to see something else which to me was a cause for concern. Number one, we were at a level that had already supported the price previously multiple times. So we know there's some kind of demand over there. Number two, if we look at the KP, there was already an exhaustion of this lower time frame downtrend move that had printed, telling us that, hey, potentially this downtrend could have come to an end. And lastly, number three, we lost this level and put in arguably a bearish retest, right? And if this was truly bearish, I would say we should be dumping further. Not only did we not see that, we saw price coming back higher, and once we started reclaiming this level here, I was out. And literally you can see here in the next few bars, we got a massive wipeout of all these unrealized profits if we didn't take that profit there. And I would say using the KB as confluence with other PA concepts here, prevented this shit show from happening. So those are the three usual ways that I use the KP. But one last thing I want to say about this is, this is my indicator and I will obviously sing the merits of it. But ultimately, it's not a crystal ball. And if anybody tells you that indicator is one, I would say it's probably a scam. And I want to be fully transparent on this because the fact is, you're not going to get a 100% win rate on this. I get comments like, oh, why is there a plateau but price didn't bottom exactly at that level? I would say if it does, that's great, but it's definitely not going to do that all the time. At the end of the day, the KP is simply telling you that price, which if it was already on an existing trend, whether an uptrend or downtrend, is simply just coming to a pause, right? It can go sideways and then reverse. It could reverse straight away, or it could go sideways for a while and then start moving in the original direction again. I think the key thing here is we cannot predict the future, and that's why I always recommend using it with confluence with something else to give you a holistic view of where we are in terms of price. And that's about it, guys. Hope you guys found this video useful as it was the one that was the most requested for so far. If you'd like to use this indicator, I'm still enabling for free at the time of recording this video, and it will remain free until sometime in the future. So you can join the Discord, submit the Google Forms in there to get access. You can find the Discord link in my Twitter bio, which I'll link in the description box below. There's a lot of resources there as well, like case studies, and we have community members sharing their trading wins and misses, so we can all learn from each other. Alright, so I guess that's all, and I'll see you guys next time. Bye.